A genius investor with 200 properties. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. I have my morning stein of coffee and I thought we'd sit down and have a look at this article from news.com.au. And this article is discussing a genius investor that has 200 plus properties and aims to get 6 more homes during this pandemic. Now, I thought this would definitely be an interesting one for all of us to have a look at. Well, I mean, let's have a look, guys. Here's the young bloke, 35. If you got 200 properties, you're doing pretty good. You're doing pretty good. He's got the beautiful car there, But let's have a look at this a bit closer, guys, because I think we all know the strategy that this guy has used. A former Mount Druitt resident turned property mogul has snapped up 6 more homes during the pandemic crisis, despite being $18 million in debt, and revealed how he plans to buy plenty more. Plenty more. A former Mount Druitt resident who already owned more than 200 properties has snapped up 6 more homes during the crisis. Prominent investor Nathan Birch, 35, said he was preparing for another buying spree despite being $18 million in debt because the economic downturn was created unprecedented property investment opportunities. I'm buying everything I can get my hands on. Nothing compares to the opportunities we're going to get, he said, adding that he hoped to purchase another 20 to 30 properties over 2020. So, honestly, he might be right on the money here. He might be right on the money. There's going to be plenty of opportunities. But, the issue is with his LVRs, if he can handle it. I'm sure he probably could. He'd just have to sell some properties to pay down his debts. He said he was planning to do this despite having more debt than anyone in Australia by channeling the considerable equity he has amassed in his properties into additional purchases. Now, this is the risk with this strategy. We've seen yesterday, we were looking at just West End here in Brisbane, with the luxury high-end penthouse apartments. And I showed you all, if you haven't seen that video, have a look at it, because it was right near where I used to have an office there in the back of a warehouse, when everyone's trendy and it's the hipster cool part of the city, or it was. It's all disappeared. You used to be able to go out for a nice craft beer and shisha in the streets, all gone. Now it's just apartments after apartments, and no capital gain has been realized in 10 years. And a completely anecdotal evidence that I have is literally across the road from me, there's been a house on the market for months. 4 months. And they just had another open day, and some people turned up, which was surprising. It was listed for auction and never reported as passed in. I don't think anyone turned up. But the rumor up the street is, amongst the neighbors, is that the owner doesn't want to sell for less than they purchased it for. And it's sitting there. It's a nice house. It's the interior's more modern, renovated. The blocks are a bit smaller than ours, but still it's beautiful. And they can't sell it for $100,000 less than the bank's evaluation on my place. The equity that I have when they keep telling me, borrow more, So it shows you. But I'm sure all of his equity is perfectly accurate there. The total estimated value of his properties was worth more than 50 million, he said. So 50 million, and he's got 18 million in debt. So if he takes a haircut, say 30-40%, he should still have enough LVR to keep going. But what if rental returns plummet? I'd be interested to see if they mention rent strike for this guy, if it's affecting him. Mr. Birch, the founder of an investment advisory called Binvest, purchased his first round of properties shortly after the Sydney housing market went into a tailspin in 2004. He was still a teenager at the time and was working multiple menial jobs to fund the purchase, but benefited from a weaker market and falling prices as the harbour city went into a slump. Many of Mr. Birch's subsequent properties were purchased during the GFC from 2008 to 2009. The properties were usually cheap homes in lower income Sydney suburbs such as Mount Druitt, or houses in southeast Queensland purchased below market value. So he is doing the strategy. He got a house for 35 grand in Ipswich. Well, there you go. I mean, that's just ludicrous. He obviously got a dump and fixed it up. You wouldn't even get it for the land for that. Oh, good on him. Good on him. He's doing the strategy of buying during tough times. Buying during tough times. You don't buy when the market is on fire. You don't buy when foreign investment is flooding into the country. You know. And at the lower end of the market, there'll always be demand for rentals, even if times get tough. But we'll have to see. We'll have to see. They quickly shot up in value after the GFC passed, allowing him to draw equity out of the properties to use for additional loans on even more. I mean, here you go. This is what he's buying. So it's not for everyone. You got to do a lot of work to get something like that up to scratch. A lot of money you got to put into it. You know. Banks were usually willing to continue giving him loans for the new purchases because the properties were cash flow positive, meaning the rents were higher than the mortgage repayments. He also purchased some properties through trusts. Well, there you go. There you go. If he's cash flow positive, that's fantastic. Fantastic. He's smarter than the teacher we saw, guys. So he's smarter than the teacher, which, you know, which is I want looking at him. It may be unfair, but I bet you he didn't give a crap about the school. He probably knew how to do it his own way. What do you reckon, guys? You think that's an unfair call of the bloke? I reckon he's probably smarter than the teacher we saw, who was buying negative, writing off one property, negative gearing one property after another. So he's got 6 of them now. None of them paid off. None of them cash flow positive, and he could lose everything now because he has to go out of interest only. So who do you think's smarter, guys? Who do you think's smarter? He said current conditions were similar to a decade ago in that buyers were dropping out of the market, fearing it was a bad time to become saddled with mortgage debt. This was thinning competition for properties at a time when sellers were becoming increasingly open to negotiating prices. The people running from the market are leaving behind excellent deals, Mr. Birch said. I'm really excited. I'm smiling ear to ear. People are saying the property market is going to crash, but it's not going to crash, it's going to go up. So he's arguing that it will go up. The serial investor said he was banking on property prices rising in the near future because of the government's economic stimulus during the pandemic, which he said was akin to printing money. Well, he's right there. He's right there. So he's betting, he's arguing that property prices will go up because, well, where is all the money that's created in Australia? Where does it usually manifest? So he's going to take advantage of the bubble that's caused by the Cantillon effect, with money being created in the property sector. Will it end up there? We'll have to see, guys. We'll have to see. But I mean, one thing he's doing, he's buying shit boxes and fixing them up. He's getting cash flow positive properties. He's not like the other couple in another article I read who took out, one on 55, one on 35 grand, who were looking at an $800,000 property, or who was buying an apartment, with 100 others and expecting capital growth. So he's not betting against the Fed. What do you think, guys? Do you think he's right there? Do you think this money printing, which is occurring, will manifest in property? It's not that property is going to be worth that much more. It's that money is going to be worth so much less when prices go up, Mr. Birch said. He added that he was not fearful of making further purchases because he didn't expect interest rates, which were the lowest on record, to be raised in years. I have so much debt, I don't know anyone else with 18 million in debt, but rates won't go up, he said. And, well, if we look at the cash rate here, guys, it's in the gutter. It's in the gutter. And our very own governor from the Reserve Bank said rates are not going to go up until the economy is recovering. They can't raise rates because so many businesses are in debt. It would destroy the economy. We're going to be stuck with this cheap money for a long time. His views of the markets have attracted heavy criticism, and some people have told him to lay off the drugs, he said. His opinions also run contrary to many economists who have forecast the housing market may not recover to pre-pandemic levels for years. Well, does it matter? What's his time frame, guys? I mean, sure, he's getting attention here for his investing company, and I'm sure he's selling educational materials and things that he's done. But if he's getting cash flow positive properties, bargain basement stuff, a house for 35 grand in Ipswich, I mean, come on. Research group CoreLogic recently noted the Australian housing market was on the cusp of another downturn. So more and more are talking about it. Critics have also pointed out that purchasing properties with equity made sense in a rising market, but was highly risky in a falling one. Well, exactly. Here's the thing, guys. Everyone's a genius when the market's going up. Every spruiker will be a genius. We saw it in crypto. So many of these geniuses and people doing their online courses and everything learn how to make a fortune in crypto. You know, I got lucky and bought some years ago and it shot up. Now I'm selling a course on it. Everyone's a genius in a rising market. Let's see how Birchie will do during the, falling market, during how it changes. Will his strategy work out? Mr. Birch learned this the hard way in 2017 when he had to offload more than 10 properties to pay off debts. But he remains enthusiastic about the coming months. I see it a little differently to a lot of people, he said. It's one thing if you aren't in a position to buy, but I think there will be a lot of people who could have bought who will be upset they didn't take advantage. So is it FOMO, guys? Is this a FOMO piece? Right now, we have probably the greatest opportunity for property investors will ever see. Mr. Birch said he also wasn't concerned about recent drops in rental demand, which was putting a squeeze on landlords. Newly published rental data showed Sydney's rents have dropped an average of about 7% annually, while similar falls were recorded in other capitals where he owns property. But he said rental drops hadn't affected his properties because most of them were rented out for $300 to $400 per week, which is still relatively affordable for most families. I focused on buying in blue-collar areas, he said. It made my portfolio recession-proof. So, I think, to be honest, there's, some smart insight that Mr. Birch is sharing with us here, different to some other property spruikers. I think he bought in the right time in Sydney and rode the equity up. But he's buying in properties that he can rent out cheap. He's buying dilapidated stuff that he's fixing up. And he's banking on government stimulus flooding into property. Now, if it's going to flood into property, what's the effect going to be? Maybe if you've got one apartment that's similar to 100 others, you may get very little equity growth. But if you're buying the low end of town, where there'll be continued demand, perhaps it could work. What do you think, guys? What do you think about his strategy? Do you think if property went down 40%, are we going to see a 40% cut in some of the stuff he's got here? Do you think it will, or if it takes a 40% purchasing power cut because of the inflation of the dollar, is it going to affect his little empire he's got here? We'll have to see, guys. We'll have to see. But, it's not something I'd be encouraging everyone to rush out and do. I can see a lot of people trying to mimic the same thing with cookie cutter apartments and then experiencing a whole lot of issues. So an interesting one, guys. I think a few takeaways there. So as always, thanks for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions in the comments below. If you're a fan and you'd like to support us, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay, or Independent Reserve and Kucoin. You can join the channel on YouTube or Patreon. Oh, and you can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, guys. I'll see you in the next video.